Hey guys, welcome to your mortgage rate forecast with Criss. It is the last day of May, and bonds are trading slightly up today. So here's what we got: jobless claims came out, not so bond friendly. Jobless claims are down, good for the economy. But PCE is also hit its mark, meaning that the PCE is like the Fed's favorite tracker or report to gauge inflation, and so that's coming in right at the Fed's target. So that's I think one more reason why we're likely going to see another Fed rate increase coming out here shortly. As far as pending home sales, they were down today, but I think mainly due to inventory. It's not that people don't want to buy houses. It's just like it's hard to. There's not enough houses on the market. So we're still seeing that pinned up demand. And let's get into the NBA, but I'm really excited to show you what happened on Tuesday. So the NBA survey came back, and the survey said average consumer across the U.S. is still getting a rate just under 5%. But what did Freddie say? Well, before we get to that, let's talk about Tuesday. Look at my mouse here. This long green, this was really due to, it started off with Italy and the potential creation of a new government. Man, that just spiked rates over there, almost a 1.5% in one day. It was crazy. So what that did is that caused weakness in the euro compared to the dollar, and investors over there are like, heck, let's get our money out of here and throw it into a safe haven in the US. And so Tuesday was a really good day for the bond market. We saw some major gains, and not only are we maintaining this upward trading channel, which was what we want for higher interest rates, but we're also seeing money coming in from other countries. That's what we need, because we have quantitative easing where the US government is putting less money into our bonds, so more money from other nations to help us. That's a very good thing. So anyway, we saw a nice rally there, but as you can see, we pulled back the reins, and we're kind of back to where we started at the opening of the day. Still a really good sign for bonds. What is Freddie reporting right now? Well, April, they said the average consumer is at a 4.47 and paying half of a point to get there. Now bonds are trading closer to those April averages. So MBA and Freddie are way off. Personally, I think Freddie is closer to actual market conditions. I'm sorry, I want to say MBA is closer to actual market conditions. Freddie, I think, is a little skewed right now. So let's get to the forecast. Last projection was a hit. That's awesome. And we were at the top end of that trading range, which is really good for consumers right now. What are the analysts saying? Well, on a short term, they're all kind of bearish. They think that we kind of got our gains, and that bonds will be pulling back the reins a little bit more. And I have to agree with them. Long term, they have turned a little bit more neutral versus bearish, thinking that bonds are just going to continue on this nosedive. So it's nice to see the analysts positioning there. So here's my scoop. I think over the next couple weeks, why did I say 2 weeks this week? I'll tell you in a second. But I think in the next 2 weeks, we're going to see bonds trading probably between about 102.40 and 101.20. We're at 102.7 now. So we do have some room for gains by about a third of a point, but we also have room for losses in almost a point. So, and I think this is why the analysts are saying, hey, let's have a little bit more bias toward locking. So that's the scoop. So that's it for this week. I will be back in 2 weeks, and we're starting to do these reports bi-weekly instead of weekly, just because it will, we don't want to release too much content to you guys and just like blow you up. So we're going to start doing bi-weekly reports, so be expecting on that. But if, of course, you have any questions in the meantime, hit us up on YouTube. You got my email address, hit me up directly, and I'd be happy to show you where we're at in the interim. But we'd love to hear from you. Leave those comments down below. Hit that like button, and if it's your first time on the channel, don't hesitate to subscribe. And if none of this made sense, like, hey, like, I'm kind of new to this. How do these mortgage-backed securities, how do they impact me as a consumer? I just want a good rate. Click at the top right. That's going to be Mortgage Bonds 101, and then it'll teach you the basics that you need to know on how the bond market impacts you as a consumer. So anyway, that's it for this week. We'll see you in a couple weeks. Take care, guys. Bye-bye.